Well, good afternoon, everybody. My name is Eric Levinson, Head of Business Development for Vena Capital, and thank you very much for joining us for our mid-year review. Now, in my opening comments, I'm going to cover a little bit of what we got right, what we got wrong, and what we didn't foresee. And then my colleagues, Michael Kokolari, our Chief Economist, he will talk about the economy, and Andy Ho, our Chief Investment Officer, will talk about what's going on in the stock market. So without further ado, let me address kind of in the opening webinar we did in January, we always talk about predictions. And so one of the things we do, and clients have really told us they appreciate, is that we actually hold ourselves accountable. So here's a reminder of a few things that we predicted and have we done. So for 2023, we thought we'd have modest inflation, which we've had. It's actually come in at less than 3%. We thought we would see a rebound of the stock market. We're up about 11% through the end of June. We thought we would see an increasing trading volume, still below peak levels, and we were correct on that, and it's increasing even every day now. We thought we'd see accommodative policies that we ease the corporate bond market. We have, and both Michael and Andy will talk about that a bit. We thought we would see supportive policies for real estate sector. We have, not necessarily out of the woods, but we definitely think the worst is behind us. We did think we'd see manufacturing and export slowdown. Michael will talk more about this in terms of the delta, in terms of the slowdown. And then lastly, we thought we would see an increase in overall infrastructure spending, which we have seen. Now, what are a couple things that maybe we didn't get as right? So yellow light means we kind of got part of it right. We didn't really see an appreciation in the Vietnam dong. Hasn't been really depreciation, but we haven't really seen it strengthen versus the dollar. One thing that we got yellow light on as well is Chinese tourists really haven't come back. As part of the, quote, China reopening boom, there really haven't been a boom. And Chinese tourists were about a third of tourists into Vietnam, and they really haven't come back too much. Things that we definitely kind of missed. Domestic consumption. It actually has slowed down significantly in Vietnam. And when I say significantly, it means it's still growing, but growing at a slower rate. Michael will certainly address that in his comments. And then weaker than expected GDP growth. Now, I want to give Michael credit here before I turn it over to him. Michael actually had predicted 5.5% GDP growth for 2023 in January, which was lower than the consensus at 6.5%. Having said that, Q1 and Q2 was a little over 3 and a little over 4, and so we're still trending lower. We've brought our estimates lower. So even though we were on the lower side and probably the lowest side of predicting the economy in 2023, what we've actually seen is even a slower growth this year. And then last but not least, what we didn't foresee was actually significant interest rate cuts in Vietnam. So the State Bank of Vietnam was very early, certainly relative to other global banks, and actually reducing policy rates, which has helped stimulate the economy. And Michael and certainly Andy will talk about the rationale behind that, as well as the impact on the market. All right. Now, one of the things that people always ask is, well, okay, well, how have you done? And so as we look here at our offshore funds and our equity funds, VVF, which is our UCITS portfolio, we entered the year with a very cautious approach based on what happened last year in the market. We're up year to date 9.2 versus the VNI in dollar terms at 11.5. Now, I'll point you to the 3-year number of 20.2 versus 10. Anytime you can generate 10% alpha per year on a 3-year average, you're doing the right thing. And again, 5 years since inception, numbers look equally strong. VAF, which is our Cayman vehicle, has more of a focus on small and mid-cap stocks. Year to date, that's up 16.7 versus 11.5. 3-year, 12% alpha, and then inception numbers are great. And then our local equity funds, VSAF and VEOF. Again, VSAF, which has the more emphasis on small and mid, up 18, and the 3-year average of 28 versus 10. So again, really significant outperformance on the 3-year and 5-year, both for VSAF and VEOF. And so again, our equity PMs and analysts are doing a great job. On balanced and fixed income, VIBF is half equities, half debt. Year to date, again, more conservative positioning, 6.3 versus 7.4. I'll point you again to the 3-year number, 15.4 versus 8. And then VFF, our fixed income fund, was the #1 performing bond fund in Vietnam last year. Year to date up 3.9 versus 3.5. 3-year at 7.6 versus 5.7. It recently had its 10-year anniversary. It is the longest established mutual fund inside of Vietnam. And so we're very proud of the performance we've delivered on behalf of our clients, whether it's equity, balanced or fixed income. We continue to generate long-term alpha, and we really focus on risk-adjusted returns, and we're very confident that the rest of the year will turn out well. So with that, let me turn over to my colleague Michael, who will give us an update on the economy.
Thank you, Eric. Okay, well, Vietnam's economy unfortunately remained quite weak in Q2. So this is the second quarter in a row of weak GDP growth. Now, the strength in the economy was the tourism rebound. The Chinese tourists in particular have been weaker than what we had expected, but what we've seen is other tourists have been stronger than what we expected. So overall, this remains a strength for the economy in the first half of this year. You may recall that foreign tourism previously accounted for about 10% of Vietnam's economy. So it's really taken off this year. The weaknesses of the economy remain, and this is unchanged from Q1, is the weak demand for the products that are made here in Vietnam. And so that means that manufacturing, which is about a bit more than 20% of the economy, has remained weak. Exports have remained weak. And the other big weakness is that the real estate market has remained frozen. And what's starting to happen is that the sentiment of the frozen real estate market is, as Eric kind of alluded to in his opening, starting to feed through to weaker domestic consumption. So it's not really a wealth effect because the prices are not really plunging, but just the sentiment impact of that, the fact that the real estate market is kind of frozen is leading to people, domestic people, spending less money. And then we have these two kind of neutral factors. The first is that infrastructure spending has picked up. However, it's really just in the last 2 months, in May and June, that it's really picked up significantly, and it's not really yet enough to move the needle for the overall economy. Now, that having been said, I do expect that in the second half of this year, you'll see more intense focus on infrastructure spending in response to the slow economy, which is primarily because of the international factors, the slow exports. But that being that as it may, so far the infrastructure spending has not really moved the needle. And the other neutral factor is something that we talked about really starting from more than 6 months ago, which is that the China's reopening was always going to be kind of fairly neutral for Vietnam. And the reason I'm mentioning this as a neutral factor is that we do get questions sometimes, is one of the reasons why the economy in Vietnam is weak this year is because of the China reopening has been weaker than what people had hoped for or had expected. And we had always thought that this would be kind of a neutral factor for Vietnam. So that's not the reason why the economy is weak in the first half of this year. We have this little scoreboard of the measures that the government is taking to support the growth. The most important one is, you may know that the State Bank of Vietnam has now cut policy interest rates in Vietnam 3 times by 150 basis points. I mentioned infrastructure spending. This one here, we put a yellow dot next to, which is that in addition to cutting policy interest rates, the government has also kind of made a lot of noises about some policy actions and some measures that they have been taking in order to try to support the economy. We put a yellow dot next to this one because here again, the reality is that these measures have not really moved the needle for the economy, and really more dramatic, more drastic measures are needed if they want to support the economy. So you may know, for example, they've cut the VAT rate from 10% down to 8%. Okay, that's good, but it's not really enough to move the economy. They've also made it easier for foreign tourists to come. That's great, so that will help, but that's going to start basically from in August. And there's been some measures to kind of help support the real estate market and a few other things. But again, so far these measures are not big enough to have to really help boost this figure. So we look forward to more infrastructure spending, in particular in the second half of this year. On the next slide, I have my updated forecast. As Eric mentioned, we have now cut our GDP growth forecast after the results of the first half. The other notable thing on here is that I am now, this slide you may recognize if you've seen the webinar where we reviewed Q1. So the main things that have changed is the GDP growth forecast. And the other thing that's changed is that real retail sales excluding inflation, I'm less optimistic now on that. And that's because of what I just mentioned, that the domestic spending is starting to weaken. In the first half of the year, we grew almost 8.5%. However, this figure was boosted by all the tourists that are coming back. I estimate that if you strip out the spending from the tourists, because remember that went from kind of 0 last year to a big number this year, that the spending by normal local Vietnamese people who live here, which usually grows at about 8, 9, 10% pace. Currently, spending by local people is growing at around 3 or 4%. So that is a weak point for the economy. And then, as I mentioned, we're more optimistic on the tourism now. So I used to have a 60 here, and now it's a 70. So these two slides are kind of a snapshot of where we see things. And what I'll do for the rest of my presentation is I'll go into a bit more detail into the most important factors that are influencing the economy. And the very most important factor is what's going on with the exports and the manufacturing. So this, what I have on the screen here is a reminder of a slide, and this slide, you may recall, appeared in our last webinar, reviewing Q1. And we actually also had a diagram similar to this in the Looking Ahead report that we published at the very beginning of the year in January. And basically what we were talking about back then, and has come to be the way that we had expected, is that in late 2022, consumer-facing firms, so this is retail firms like Walmart and Target, and also other firms like Nike, Lululemon, et cetera, their inventory surged in late 2022. So it was kind of always obvious to us that this year would be a year in which the US firms, and remember Vietnam's biggest export market is the US, is that the firms in the US would be running down their inventories this year, and therefore they would have less orders for FDI factories in Vietnam. And this is exactly what's happened. So I just put up this slide to kind of review, remember that this was the setup. And so now you see that, not surprisingly, exports to the US are plunging as these firms run down their inventories. And because this is such an important topic, and one of the most important topics for the economy this year, I have two slides now where we drill a little bit more into the details into the story. Here is, you may know that in the US there are two PMI, Purchasing Manager Index, that people look at. One is the ISM number, and the other is from S&P Global. And what this slide shows you is that both of those PMIs are saying that inventories in the US are now really getting depleted at a very, very fast pace. So in a way, that's kind of a good news for us, because it means that the whole process of inventory bottoming out is kind of happening right now. And we expect that by the end of this year, this whole process will be finished. So we had already projected how things are going to go with inventories as this year progresses. And so that is kind of playing out the way we expected. And so what I would expect is that right now, the PMI in Vietnam is 46, and I would expect that by the end of this year, you'll probably see, end of this year or beginning of next year, Vietnam's PMI to come back over the 50 level as this whole inventory depletion story plays itself out in the US. And finally, because this story is so important, I'm going to go just one more layer of granularity, and I'm going to show you what's happening in about half of Vietnam's exports are high-tech products, which is about a third of our exports. And then the rest is not the rest, but the rest of the half that I just mentioned is garments and footwear. So those two product categories make up more than half of our exports. And what you can see here is, this is a chart on the left here. This is essentially what's happening in the consumer electronics orders. And so this is basically shows you that the orders for high-tech products are really bottoming out right now. And we see that also because I just mentioned that Vietnam's PMI is 46. It's actually bounced a tiny bit in the month of June, from May to June. This also happened in China. And also when you look at the month-on-month export figures, we see that there's been some stabilization and some recovery of products, exports of products like laptop computers, et cetera. So that the story about the consumer electronics, high-tech products, that's bottoming out now. However, in contrast, this slide on the right is kind of reflective of what's happening in the garments and the footwear. There's a firm in the US, a retailer called Foot Locker, which is the leading retailer of athletic footwear, and they came out their results a couple weeks ago, and they said that their inventories are still up more than 20% year on year. So the point that I'm trying to make on this slide is that, yes, consumer electronics is kind of bottoming out right now, But garments and footwear, there's still layoffs happening in the factories because that story is probably not going to, their inventories are probably not going to bottom out until beginning of next year. So that is the main source of weakness in the Vietnamese economy right now. The government, the primary response has been to the weakness in the economy has been to cut policy interest rates. What enabled the central bank to cut policy interest rates is a stable Vietnam dong. The dong is kind of more or less flat this year, and that's despite a 5% depreciation in the value of China's currency, and that inflation has been fairly modest. So the government's cut policy interest rates, and that has also fed through to, not surprisingly, that the banks are cutting their deposit rates that they offer to people. So what had happened last year was that the deposit interest rates went up by about 250 basis points, and as a result of that, it was one of the reasons that the stock market went down last year. People took money out of the stock market and put it into the bank because the rates were so high. And so now that the rates have come down and some of those term deposits are maturing, people are taking some of that money and putting it back into the stock market, which is something that Andy will talk more about. And what has really enabled, one of the main factors I mentioned that enabled them to cut the interest rates is that the dong has been relatively stable. So last year, recall that in late last year, the value of the US dollar had surged by almost 20% in late 2022. And so because of that surge in the value of the dollar, Vietnam's central bank and several other central banks, particularly in emerging markets, hiked interest rates to protect the value of their currencies. Vietnam was not alone in doing that. And what is happening this year is that the value of the dong is being supported by a quite remarkable swelling of our trade surplus. Okay. Now that might sound strange, what I just said, that our trade surplus is going up, basically flat last year and like 6% of GDP this year. You may know that any trade surplus over, call it around 3-4% of GDP is a big number. So that sounds a little bit strange because I just said like things are not going well for our exports, the demand for products that are made in Vietnam is weak. And yet, despite that, we're having a big surge in the trade surplus. And so what the story behind this is that the FDI factories, they're looking at their order books. They know how things look for them for the rest of the year. And what they're doing is they're cutting their imports of production materials. And so what you see is that Vietnam's imports are falling at a faster pace than exports. But unlike a lot of countries in the world where if you saw imports plunging, you would say, oh, the domestic economy is, could be in big trouble. Most of imports in Vietnam are of production materials, particularly for FDI factories. So imports are falling at a faster pace because the FDI factories are sort of using their inventories that they already have of things like fabric, electronics, components, things of this nature. So the trade surplus has swelled, and this is one of the factors that enabled the central bank to cut the policy interest rates. The cut in policy interest rates will help to support the real estate market. And of course it will help support it because when mortgage rates come down, housing becomes more affordable, for home buyers. And the other factor is that when interest rates come down, investors in Vietnam have a choice where they can put their money. They could put their money in the stock market, in gold, in the bank, in real estate. And so when interest rates come down, that's another factor that's going to help encourage investors to buy apartments instead of putting their money in the bank. You would probably need to see about another 100 basis points decline in interest rates before it would be a big enough increase a big enough drop in rates to encourage home buyers. And we think also that you probably, in addition to interest rates coming down, if you want to encourage investors to take their money out of the bank and put it into real estate, buy apartments as a savings instead of putting their money into the bank, you would probably also need to see a bit more depreciation in the value of the dong. So that's a possibility that the policymakers could lower rates even more, partly with the intention of letting the dong fall a bit, maybe 1-2%, something like that, as a way to encourage investment flows to the real estate market. All that having been said, the main impediment for real estate development remains, and has been for for more than a year now, is the difficulties that developers have in getting zoning and approvals. Some of that has eased a bit, but we would need to see more significant easing in order to really see a revival of development activity. When that development activity revives, one of the really important key points that I want to make, and we've made this point over and over in different webinars, is that in Vietnam, very unlike a typical emerging market real estate bust and boom. So in normal, and what happens in emerging markets is too many apartments get built, and then you're left with all these empty units all over the place. That is absolutely not the case in Vietnam. And what this chart shows, this is just for Ho Chi Minh City. It's actually easier to do it for Ho Chi Minh City than Hanoi. Here's a 10-year period starting from 2015 to, well, we're almost at 2025. We can kind of project where things are going to look 2 years later. Basically, you see that the population of Ho Chi Minh City has gone up a lot, and yet every year the number of new housing units that are being supplied to the market is actually much lower than it was like almost 10 years ago. And so what this says to us is that there's a big pent-up demand building for housing for normal, ordinary local people. That emerging middle class people, this kind of thing. And the demand outstrips supply by a factor of at least 2 to 1, and it's just been that pent up demand has been building more and more every year. And so the point that I want to make on this slide is that when these issues about the zoning and approvals get solved, and we think because of the slow GDP growth in the first half of this year, there'll be more movement on that in the second half of the year. And when interest rates come down a bit more, you should really see a surge in housing activity. This will probably be something that benefits the economy more next year than this year, but it is something to keep your eye on. Similar to the issue of zoning and approval as being the main bottleneck for housing development, this has also been the main impediment for development of infrastructure. The government clearly has more than enough money to spend on infrastructure. This is a point that we've made in our last webinar and some of our other reports that we've sent out. And we do see, as I mentioned, in the months of May and June, a pickup in activity. And we do think that this will be something where you see more activity as this year progresses, because this is kind of the main lever that the government has at their disposal to kind of quickly boost the economy or support the economy. So I do expect to see more activity in infrastructure development for the rest of this year. Finally, I want to just touch on China briefly. Again, to reiterate, we had mentioned already a long time ago that China's reopening would not be kind of a major factor for the economy this year. It is unfortunate that the Chinese tourists are not coming back in the full numbers that we had expected, although we do see in the month of June there was a little bit of improvement on this. But overall, the main point I want to make here is that when we get asked the question, is the reason Vietnam's economy is weak this year because China's economy is weak? No, actually, go back and read this report and you see the two are quite disconnected. That having been said, one benefit we did get from this kind of weak Chinese opening is that inflation in China, particularly food price inflation, does have an impact on inflation in Vietnam. So the fact that the China's reopening has been fairly weak is one of the things that has helped to keep our level of inflation, food price inflation, low here in Vietnam. And so that was another factor that enabled the central bank to cut interest rates. Okay, so that's everything that I wanted to cover. And now at this point, I'm going to hand it over to Andy, who's going to talk more about the stock market and the other real estate market. Okay, thank you.
The stock market in Vietnam, reflected by the VN Index, has done relatively well in 2023. Up, like Eric has mentioned, to 11%, and will probably go up even further until the end of the year 2023. Confidence is coming back to Vietnam on the back of lower interest rates, particularly as deposit rates come down, like Mike mentioned, and also because of lending, full margin lending rates have also come down. We're also seeing on a global basis moderations in inflations, and a lot of central banks, governors of central banks have sort of engineered a soft landing for the global economy. And the market in Vietnam is obviously undervalued. We'll show you that in a bit in terms of PE ratio. And in terms of growth, we are seeing a relatively tame growth for 2023, but we feel that 2024 will show a tremendous level of strong growth. And last, we are seeing a tremendous amount of healthy market liquidity. The average daily trading volume has increased from about $400 to $500 million a day at the beginning of the year to about $700 to $800 million a day at this moment in time. Okay. With that, we do have some risks to think about as I summarize the market. The obvious risks that most global investors face is a deeper global economic slowdown, geopolitical tension. But in Vietnam, we are facing some risks revolving around anti-corruption campaign and arrests and investigation. We hope that the challenges behind us and going forward, the government recognizes it can cause some instability in the market. And I expect these types of activities to lessen in the years to come. In terms of corporate bond, we do have a situation where there's an overhang. We do have quite a bit of bonds maturing. They'll need to be refinanced, repaid, or even restructured. And that is a challenge that some of these businesses that have issued corporate bonds over the last 2 or 3 years will have to face in the coming months. Okay? And a strong US dollars will obviously weaken the local currency. That would be very positive on the export front and potentially, as Mike also mentioned earlier, potentially get folks to think about investing in other assets such as real estate and stock market. In terms of the long-term investment themes, after all, we are operating in a frontier emerging market, so we like to look at the more longer-term time frame in terms of investment. So if we look at the longer-term investment themes, we are focusing on domestic consumption, infrastructure, lower rates, interest rates lowering around the world, including Vietnam, FDI. Vietnam enjoy a tremendous amount of FDI each year to the tune of about $20 to $22 billion. And obviously consolidation. There's a lot of banks, there's a lot of real estate companies that find it hard to raise capital, so we feel this consolidation play in this sector. So in terms of domestic consumption, people are getting wealthier and wealthier every year in Vietnam. Mike did say that this year there's a bit of a weakening in domestic consumption, but made up by foreign tourists coming to Vietnam and spending money. But what we think in the long run, domestic consumption will be very strong as people get wealthier, and that'll benefit the aviation sectors, banks, consumer discretion, and real estate. In terms of infrastructure, like Mike mentioned earlier, the government is motivated to spend this year and next year and the following year to, one, develop the infrastructure needed for the economy, but two, also to support the growth of the GDP. And with infrastructure investing, folks like Hoa Phat, the largest steel company in the material space, should benefit. And when rates come down, we will see brokers in real estate benefit. Brokers because they're able to lend for margin lending, and margin lending is a key revenue stream for some of these brokers. And obviously real estate, people can borrow for less to buy real estate, as well as real estate developers that can borrow for much less to develop these projects. In terms of FDI, industrial parks would do well, and ports and logistics. As foreign investors come to Vietnam, they open up factories like Legos opening up a factory. They will have to ship the finished goods abroad, and ports and logistics will be a tremendous area for investment. And that leads us to a point that Vienna Capital recently signed a partnership with A.P. Moller, one of the largest logistic companies in the world, to invest in ports and logistics in Vietnam. And consolidation, like I said earlier, we do expect some consolidation in some of these companies, in banks, real estates, and consumer, because the market is maturing and you do need scale, and there's a limited amount of capital, as always. And so consolidation is a key play in the coming years. With that, let's look at the performance over the last, let's say the last 6 months, if you will. The VN Index has increased about 11.2%. There has been some volatility, as you can see, the first couple months of the year. But since then, it has been stable. It has been growing steadily over those last 3 to 4 months. The biggest contributor to the growth of the VNI, and we'll look at it a bit later, seems to be in the banking and the material space. Okay. Now that said, here, if you look at this breakdown in terms of which sector have contributed to the growth of the VN index, you can see that banks make up 6.7% of the 11.2%, or almost 60% of the VN index expansion or growth over the last 6 months. And that's on the back of the fact that the banks represent a weight of roughly 37% of the index. And obviously, it has contributed to about 18% growth during that 6 months. The other sector that has contributed to the VN index growing has been the materials, the energy, as well as the industrial space. Now, In terms of the various asset groups within the VN index, we have seen that the small cap have done tremendously over the last 6 months. And really, this is on the back of the fact that retail investors, domestic investors, are now beginning to get more and more excited to participate in the stock market. And when domestic investors participate, in our experience, they tend to focus on the small caps initially and later on to the mid and the large cap. But they do focus primarily on the small cap in the earlier stage. That's why we're seeing a roughly 25% gain in small cap over the last 6 months. Now, if we look at valuation in terms of PE, Vietnam's about 11.5 times earnings for 2023. Lower than most markets in Vietnam, in Southeast Asia, with the exception of Singapore. Now, if you look at its discount, it's between 15 to 20% relative to its neighboring markets. And we do see a potential growth in terms of PE expansion into the average. Vietnam does average roughly 14 times. And being 11 to 12 times, we do see some expansion in the PE ratio in the coming year, in addition to EPS growth. So if we do look at EPS growth, it has been revised. We've revised it down to less than 10% for 2023. But having said that, we have revised up the potential for EPS growth to about 24%, 25% for 2024 over 2023. The sectors that will contribute the most to this growth so far this year has been aviation. Just on aviation alone, passenger flights have increased 30% relative to the same period, 2022, of which international flights into Vietnam have gone up 14.4 million flights for 6 months, which is 5 times more than the same period last year. So we're getting a lot of domestic travel as well as a tremendous boost of international travel post the pandemic. Now, in terms of average daily trading volume, as you can see, we track it throughout the last 5 to 7 years. But if you look at the last 6 months, beginning of this year, we were trading at around $400 million in value per day. Today, we're upwards around $800 million per day. And it is predominantly driven by domestic retail investors. Again, lower interest rates, lower margin lending rates have made domestic investors more excited about the stock market. And we do think this is a long-term trend because the lowering of interest rate seems to be a steady trend over the next 1 to 2 years. Probably more, it's a reflection of what's happening in Vietnam, but also a reflection of what's happening in the global economy. In terms of annual returns, as you can see, Vietnam has posted more wins than losses. The losses obviously in red. But what we hope for is it doesn't show up 2 years in a row. Last year we had a big loss of almost 33%. This year we are confident that the market will deliver a positive return. And in fact, until the end of 2023, we do expect even a higher return than 11.2% that we are seeing for the first half of the year. With that, I would like to invite Eric and Mike back up to do a Q&A session for the audience.
All righty, and well, thank you, sir. We've now got Andy, Mike, and I here on the chairs for our Q&A. We already do have some questions that have come in, and so I will just say, if you do have questions, please type them. I've got the iPad. I can read it in the chat function, and also because I forgot to do this earlier, I'm going to put a slide that hopefully you can see behind our heads. Our annual investor conference this year will be October 2nd through 4th here in Ho Chi Minh City. This year we've actually switched up the order. We usually begin on a Wednesday night and then have the event on Thursday and kind of a half day Friday. Feedback was people would actually rather come in early, enjoy the weekend. So we're starting Monday, cocktail reception, full day on Tuesday, half day on Wednesday. So hopefully many of you will make the trip to Ho Chi Minh City. We are finalizing our agenda. We've got wonderful speakers. So that's it on that. So let's go to the questions. And again, also apologize. I know we had a little hiccup there on the IT side, so audio-visual sides, but we're back. First question, politics. I'm not sure who this goes to. There were a few meaningful changes in leadership in the last few years. Is the political leadership stable, and is it still business-friendly, or has the tone and policies changed from the previous group? Andy, I'll go to you with that.
Yeah, I think you may have heard at the beginning of the year there's been some rumors and noise about the further changes in the leadership of Vietnam. So I can say that about 4 to 6 weeks ago there has been a confidence vote, and the top 4 leaders of Vietnam, including the party secretary, the prime minister, the president, and the chairman of the National Assembly, I can say that they've received significant level of confidence, around 95 percentile level. So to me, that's an indication that at least for the remaining terms, these leaders will remain.
Can I ask the cynical question?
Sure.
In a single party environment, that 95%, is that, I mean, where do we get that number, so to speak?
So they do come together, and various party members, there's quite a few, and they're allowed to vote, and the vote is a signal whether these folks think the leaderships are doing the right thing.
Okay.
And the fact that they have such a high level of confidence leads us to believe that these folks will remain in the leadership position for the foreseeable future. And that really means that the policy, the business policies, is going to remain friendly. And that's going to be around the area of continuing to mobilizing foreign direct investments, investing in infrastructure, like Mike has mentioned. And I think further to that, they'll probably loosen monetary and fiscal policy to encourage GDP growth.
All right, thank you. And so actually, it segue into a question that came in here. Do you think the central bank will continue to cut policy rates, and by how much and how many cuts? It's a very specific question.
Yeah, that's very topical, since the central bank has essentially cut rates by 150 basis points this year to date. There's a couple different policy rates. We usually look at the refinancing rate, which is now 4.5%. And they also have a cap on the short-term deposit rates, which is the 1 month to 6 month rates, which is now 4.25%. Okay, I think this is something that Andy and I have talked a lot about before, which is that in order to encourage the real estate market in particular, and also in general to help support local businesses, it may be advantageous. Normally, the government sort of prioritizes, for the last, call it 5-6 years, they've really intensively prioritized keeping a stable US dollar Vietnam dong exchange rate. And that's why they hiked rates so much last year. I think it's possible that you may see them have another round of cuts, of interest rate cuts, and with the idea of letting the dong depreciate by something like 1 to 2% for the rest of the year. So if that were to be the case, I think we could probably expect another half a percentage point cut in the next, call it, quarter, probably in this quarter, I would expect. Yeah.
And it was interesting because there was actually a headline this morning where it talked about the prime minister actually talking to the banks about trying to even ease interest rates to facilitate real estate recovery. So perhaps.
Yeah. And on the back of that, you did see the dong depreciate by about a half a percentage point in short order, basically in 2-3 days. So this is something Andy and I talked about a lot, and I mentioned in my presentation as well, that for investor point of view, if you feel like the dong is very stable and the level of interest rates in the bank is very high, you're not going to feel as an investor that you want to take your money out of the bank and put it into real estate to buy apartments instead of having the money in the bank. But if you feel like the dong might depreciate by 1, call it maybe 2% at the most, then that would kind of encourage flows back into the real estate market. So I think that's part of what their intention is. Yeah.
But I think it's important also to note that the level of liquidity, as reflected by the average daily trading volume, is reaching $800 million a day. That means there's a lot of cash readily available to invest. So migrating away from bank deposit into real estate, into stocks, into even gold are options that people have.
And I'll add one comment to that. So last year, as Michael said, the State Bank of Vietnam raised interest rates by 200 basis points in September and October. And during the height of that, retail investors could get over 10, 11% in bank deposits for 12 months and roughly 8% for 6 months. And so what we've seen in talking to our domestic bank clients is that most people actually buy 6-month deposits, term deposits, not 12. And so a lot of that money is maturing now, or will mature in the next month or two. And so we do expect more money to come into the market. And that's
and that's definitely part of what's been supporting the market in recent weeks, when those deposits mature and people putting some of the money in.
And so it's kind of a question came in, market sentiment's improving probably because of retail investors. So go to Andy, do you think, is there a sector that you think will outperform due to the net buying from retail investors? And separately, do you see any sign of net buying from foreign investors in the near term?
Yeah, it's hard to pinpoint a particular sector that's more attractive than another, but I can say that domestic investors tend to be more short-term oriented, and they tend to focus more on the small caps at the beginning. So the small cap has done very well, as we've mentioned, and so there's probably a high level probability that they will migrate or cycle through to the larger cap, mid-cap level in the coming months. But primarily, domestic investors primarily look at more of an asset class, asset size, capitalization, more so than from a sector.
So it's less sector rotation, more size rotation.
Yes. But having said that, large institutional investors and foreign investors, yes, they'll look at more of the sector view, and they'll look at the risk-adjusted return from these sectors. As for the foreign investments, I think foreigners, we do see foreign participation in Vietnam. It's been very positive from year to date, and I think it'll continue to be positive going forward. And the challenge that Vietnam has is there are options that foreign investors have globally. But we have to, we want to say, we are saying that the valuation in Vietnam is quite attractive, and EPS growth is also quite attractive, especially if you look into 2024.
Yeah, okay. Let's see, I'm just looking. Okay, there's a couple of questions here. So one is, it says, I think maybe there was a misunderstanding. So it says, the question here is PE of 14 times historically low level? I think right now, forward PE is closer to 11.
14 times earnings is the average forward PE. So in other words, if we're average, it would be 14 times 2023 PE at the moment. We are trading around 11 to 12 times. Yeah. So there is, if you believe in the expansion of PE alone, that would be roughly a 15 to 25% increase in the value of the stock market.
And frankly, if earnings are 25% next year versus,
that would contribute more to it.
Yeah, so, okay. So 14 is not low, 14 is the average, but we're really at like 11, 12, which is much low. Let's see here. Always a question, but I think we should address it. So from Carlos, so talk about progress to lift the foreign ownership limits and what reforms are needed before an upgrade to EM can be reasonably expected.
I think
we didn't address it, but we should. Yeah.
Everyone has their view. I think for now, the foreign ownership limits, which is at 49%, and the companies through their AGM can seek regulatory approval to lift the 49% ownership limit, with the exception of certain sectors like banks. Banks will continue to hold the limit at 30%. I do not see for the foreseeable future that they will lift this defaults 49%. Again, when a company becomes public, by default, the foreign ownership limit is 49%. They can seek regulatory approval to lift that.
So like Vina Milk, for example.
Exactly. Vina Milk, there is no foreign ownership limit for Vina Milk. But it's not by defaults. Yeah. And the other part is obviously there are certain sectors that the limit cannot be lifted, such as banks.
So as in terms of getting upgrade, what is your, timeline that the government shared?
My understanding is that we'll have to go through at least a 2-year probationary period to get onto the MSCI emerging market. We have not gotten onto the probationary period yet, so at least 2 years out.
So when we hear from certain regulatory agencies that they have KPI of 2025, do you think that's a bit overly optimistic?
I don't know. To be honest, MSCI may give Vietnam a break, and they could accelerate it. So I think the key here is that the government, the regulators, and investors all recognize the need for Vietnam to migrate to emerging market, and they're doing their best to get there without disrupting activities in the market.
And I think, to be clear, the FOL is kind of the main block, right?
Yeah. All right, here's a question that came in, and Michael, you touched on this briefly, but maybe just expand on this. How does the China economic downturn affect the Vietnam stock market? Do you think it does?
Well, the stock market let me talk about the economy. That's a little bit easier
Yeah.
to put my, my expertise
Or I can
on.
actually ask him the question about the market, sir.
Look, China, Vietnam, basically the way that Vietnam's economic model works is we essentially buy production materials, capital goods, equipment, plastic, resin, cloth, fabrics, this kind of stuff. We source production materials from China. We use the labor here to fashion those into the final products, and then we essentially export primarily to the US and also to some extent to the EU as well. So in economics terms, we have a big trade deficit with China. We have a trade deficit which is about 17% of GDP, which basically means we're kind of a customer of China. And then we have a trade surplus with the US, which is sort of over 20% of GDP. So long story short, the slowdown in China's economy overall does not really have much of an impact on us. Now that having been said, the one area that does have an impact is this issue of the Chinese tourists coming back. So up until the month of June, we were only getting about a third of the number of tourists that we used to get pre-COVID. Although in the month of June, that suddenly jumped up, and that has to do with the resolution of some issues having to do with visas and et cetera. So hopefully we'll get more of our fair share of Chinese tourists back in the second half of the year. But that's the only area that's really being impacted by us.
I'll add maybe a comment from a different perspective, because I was recently in Europe meeting with some family offices, and one of the comments that they made, akin almost to the China Plus One strategy, is many foreign investors or institutional investors have actually been taking money out of their China long-only equity positions, and they're now looking at other parts of Southeast Asia to deploy.
Yeah.
So I think some of the weakness in China, or some of maybe the people getting out or diversifying away from China, may actually find some of that into Vietnam as well. So not maybe a direct linkage, but I think as people start looking at their China exposure, even on the equity side, it could be beneficial. Andy, there's a question here. Let's see here. Oh, interesting. Okay, this has actually been the headline. So this is, let's see here. The question was about structural weakness. I'm just trying to find it. A lot of really good questions have come in. Are there structural weaknesses in the economy? For example, we've read a lot about power outages occurring recently, which impacted production, manufacturing capabilities, even though supply chains may want to relocate to Vietnam. This is not a future advertisement for the logistics platform, but in a weird way it is. So are there structural weaknesses? And if there are, what is Vietnam doing about them to address that question?
Extreme structural weaknesses that would impede FDI coming here?
Or impede economic growth, FDI?
No, there's not. Yeah, I mean, the power outage thing, of course that attracted a lot of headlines, but the reality is, when you look into the details, the net result was that some factories in the north of Vietnam were not able to operate in the night shift. But actually the orders, as I mentioned in my presentation, have already fallen off the cliff, so that's not going to impact GDP at all this year. It's true also, as I think you started alluded to in your question, that the logistics costs are fairly high as a percentage of GDP, but actually they're not that much higher than a place like Indonesia. So when people talk about structural difficulties in an economy, normally the first thing that pops into your head is what's going on with labor. So when we look at the case of China, China has a situation which is called, they passed what's called the Lewis turning point. Lewis turning point is basically when you run out of workers that can come from the farm to the factory, and that's been the source of some difficulties in China the last few years. Vietnam is going to have workers that can come from the farm to the factory for at least another 10 years. So no, there's no structural issues here that we need to worry about.
I'll ask a follow-up from a different person, but I think a very, very interesting question. Do you see any activity in terms of a gradual move towards vertical integration of the value chain in Vietnam to reduce the reliance on component imports for local FDI? I think
so this
the eagle building the nest.
This is a topic that we've talked a lot about. In fact, if you look at our website, we have a couple different reports on this. And long story short, what we've seen is that the multinational companies, they are helping to build out local supply chains here in Vietnam. And they're doing this, it's not like something out of benevolence. They're doing it because they see it as in their own self-interest to do this. The same phenomenon happened in Singapore in the 1980s and also in Thailand and Mexico in the 1990s. And so when we go back and study those two cases, we can see that the same sort of measures that multinationals took at that time to help build their local supply chains in Singapore and in Mexico and Thailand, they're starting to do them here. Apple in particular is, you see them like parachuting in their best executives into local supply chains here.
And would you call that vertical integration, or would you just call it just localizing a supply chain?
Usually when people talk about vertical integration, it has a different
Right,
meaning.
okay.
Yeah. So
I think for now, you can say that they're trying to build an ecosystem,
Yeah.
which makes production more economical for them,
Yep.
and a control over the materials, a tighter control over materials,
Yeah.
rather than import. And they have to do that,
Yeah,
but
what-
eventually they'll.
I mean, I read the question verbatim. I thought it was really interesting. But when I think of vertical integration, it's the chaebols of Korea who are building every single input of every single piece.
that's what vertical
Yeah.
integration is.
But I think if we kind of re-ask the question, do we see a more localization of the supply chain? Andy, a question for you is, so banks are still roughly 37%. There was concern, I think, more from our clients as we look at the questions coming in, more towards year end in Q1 about the health of the banks. We haven't even gotten a question about corporate bonds, so that's pretty interesting. But what is the health of the banks? Can they still drive the stock market forward because it's such a big component?
Yeah, I think so. I think the banks are in relatively good shape. I think bankers have learned their lessons from past historical challenges in Vietnam and the region and around the world. And so we do see a relatively okay capitalization, capital adequacy ratio. It's about 11 to 12%. NPL is a bit higher, but very manageable, around 1.5% system-wide. Year-to-date credit growth has been, 4 or 5%, which is on the lower side. The State Bank is encouraging commercial banks to grow credit about 14, 15% this year. The challenge is that the loan-to-deposit ratio is a bit on the high end. And if they continue to grow credit at this level, we should expect them to grow deposit at even a higher level. But like I said earlier, or Mike said earlier, as deposit rates come down, there's more motivation for depositors to take the money out of the bank and invest in other assets. So there's sort of a
natural push-pull?
Yeah, it's natural push-pull. And then the banks also need to decrease the lending rates to encourage more lending activities and GDP growth. So I think for now, the banks are in relatively good shape, and they are a key cornerstone for the economy.
Awesome.
I think also, like, from an asset quality point of view, we should always come back to the idea that most lending is backed up with real estate. And you recall the slide that I had in my presentation there. Real estate values are fundamentally going to stay resilient here.
And because of the credit quota, there wasn't bad loans 5 years ago that are still getting punished today. A question came in. I'll just answer it quickly myself. Sorry, team. From Paul saying, is there a pension system in Vietnam in a state that could become a stable holder of Vietnamese equities? If not, is this a topic discussed in political circles? And a pension system was kind of introduced. A few companies, I think there's 4 licenses currently. Vienna Capital, we expect to have ours by year end. It's not a very heavy equity component. We are optimistic that in the near future, the investment options within the pension product will be more attractive, both from a tax perspective as well as an investment option perspective. So I think if we have this conversation 3, 5, 10 years from now, I do think that there will be a natural support for the stock market through some type of defined contribution or defined benefit plan that doesn't really exist today. I'm very optimistic in our conversations we've had with the regulators, that we've had with various distribution partners, that there is now demand for a pension. And I think with the demographics that Vietnam has, there's a recognition that there's enough time to actually plan ahead, seeing what's gone on in Europe and Japan, that the sooner Vietnam solves this, the more they can eliminate a future problem. So I'm very optimistic there will be a successful pension scheme in Vietnam soon. Not there yet. Okay. Another question that just came in, PDP-8, which stands for Power Development Plan, I think, was just approved about a month and a half ago. Does that actually help, and do we see more energy investment coming in? Actually, here's the question. Talking about growth sectors, I didn't hear you mention energy. When do you think investments based on PDP-8 will take off more vigorously? And then follow up from Peter as well, especially renewables, LNG.
Yeah, I think first of all, when it comes to renewable, solar, wind has had a lot of investment over the last few years, a lot. The challenge right now is to get them into the grid. The activity from EVN, which manages the grid, has been slower than the power generation companies. So they have to get caught up. The PDP 8 is a strategic roadmap, and it's clearly in the right direction. And it lays out what sort of percentage that Vietnam wants to have in terms of renewable in the 10 to 20 year time frame. And so it lays out a clear path. I think there'll be some follow-up on this document, and the follow-up will define what sort of tariff that power companies can enjoy, what sort of off-take agreement they will enjoy. And so we look forward to that more. But at the moment, in short, there has been a lot of investment in solar and wind. There'll be more to come in the coming years. And the next iteration of the documents will provide more clarity on tariffs and off-take agreements.
Okay, thank you. And another question came in, and we talked about this briefly. So kind of what do we call it, the health of the consumer, or consumer, if you look at discretionary, the stocks were, I think, the weakest sector in the market. Is that ripe for opportunity? A question came in specifically about Mobile World, MWG. I mean, what do we have a view? I mean, I know we have a view. What is our view, and do we want to share it?
Well, like I said earlier, the consumer story is very interesting in Vietnam.
Yeah.
People are getting wealthier. They are going to spend money on food, electronics, homes, furniture, etc. They're going to spend money on a lot of things. Healthcare. So we invest tremendously in this. Now, the challenge here is that the competition for certain components or certain subsectors of consumer is very high.
Electronics.
Yes. As a result, obviously the consumers benefit. But margins do get squeezed. You have to be very effective and efficient in the way you sell and you deliver your products. And so, in short, the consumer sector is very interesting, but you need to be very selective in choosing the company to invest in, because competition can be very, very brutal in certain areas, while not in others.
And is this also a year, when consumer discretionary or consumer spending was growing at 13, 15% a year, the old cliche, rising tide lifts all boats, consumer spending is growing at 3% a year, the best companies or the less best companies may struggle.
Yeah. Well, to me, this is a short-term blip. Okay. Right. So, and when folks look at Vietnam, I hope, and at least we do, we look for the medium to longer term. Yeah. In the medium to longer term, the consumer story, like I said, is still very attractive. Yeah. Right. It's just you need to pick a sustainable business model that has a good moat, if you will, or the switching cost is high. Just to give you an example, K-12 is a consumer play. K-12 education is a consumer play.
This came up in a question as well.
Okay, but if you participate and invest in the school, the decision-making factor is really not with the parents, it's with the children. And the switching cost is relatively high. So if you provide an environment that is high in quality and the children have a great infrastructure to run around, the chances of switching is very, very low. And so even though there's plentiful international schools and private school around, the consumer story is very interesting, and having a K-12 school that provides higher quality education is a very attractive business proposition.
And he answered that question without definitely giving a perspective on Mobile World. So I'll ask a different question now. This is about the market. What is the estimated EPS growth in 24 and 25? I think 24 we've mentioned, but maybe repeat it.
Yeah, I think for this year, there's been some revisions, and it's down to about anywhere between 5 to 10% for the entire, all the companies on the Ho Chi Minh City Stock Exchange. For 2024 over 2023, we are thinking about 20 to 25% EPS growth. Yep. And if you're asking me about 25 to 24, I'll just have to say, well, the rule of thumb I use is roughly 3 times GDP growth. Yep. If GDP is growing at 6%, I'm relatively comfortable to say, look, these good companies at least should be growing at 18%. Yep.
And I want to make this point because this is, to me, the most important point that we sometimes forget to talk about when we talk about the Vietnam story is we're active managers. So whether we're looking at private equity or we're looking at listed equities, we're going to own 25 companies, maybe 30 companies. And just to give an example, in our usage portfolio today, the average earnings in our portfolio are roughly 23, 24% versus the market at 5 or 6. And so we talk about the market broadly. The reality is, as an active manager, our UCITS portfolio has active share of 60%. We have a Cayman vehicle with active share of roughly 90%. When we look at PE, in a sense, the entire thing is active share. So you're buying, companies that aren't even available to the general public. And so, we do these webinars and we answer the questions really about the market and the story. The reality is we're selecting the best of the best with the best management teams. There was a question here we didn't really get to about governance. Maybe spend a word or two on it. Has governance improved as well?
Yeah, corporate governance is improving dramatically over the last 10, 15, 20 years since I've been here. But I have to admit, globally, governance has a lot of room to improve, globally. And Vietnam is no different. There are weaknesses everywhere. I think one of the fundamental things about governance in Vietnam, which you may not see around the world, is that there hasn't been any lawsuits.
In Vietnam?
In Vietnam. So corporate governance gets reviewed every so often when you have big lawsuits.
Well, and also if you think, the quote, the anti-corruption campaign is also a way of rooting out bad governance.
Yeah, but that's more on the side of looking at rules that you broke and et cetera. But when we talk about governance, for example, refraining from a vote because you're part of related party transactions, those types of activities are improving, right? And so there's a lot of room for improvement, but there has been a lot of improvements over the last 5 to 10 years.
Well, terrific. Well, we're already a couple minutes late, and there are still our people on the phone, or on the video, which is terrific. I actually took little pictures of all the questions we didn't get to. So if we have your email address, if you entered that when you logged in, we will respond to your questions. There were some questions on private equity. There were some questions about more on the energy side. So we didn't get to everything. I apologize. We will have this webinar on our website. We expect to have it on there by Monday. So if you have a colleague that didn't get to join in, you can come look at the website. Thank you all very much for joining. As I mentioned earlier, we have our investor conference October 2nd through 4th. Hopefully we'll get to welcome you to Ho Chi Minh City in person. On behalf of Michael and Andy, thank you for joining, and we will see you hopefully in October. Thank you very much.